now, and it really has been quite a day, especially for the crude oil prices, where we saw 3% of gain overnight, but it hasn't been able to hold on to those levels. All the markets actually are looking at very contradicting fundamentals here. On one side, you have the U.S. and China trade deal, which is perhaps not going ahead, not in this year is what the markets are working with. But on the other side, there is a stability coming now in the economic scenario. The demand is expected to pick up in the next year, and that is what is supporting the crude oil prices on where they are trading. Navneet Damani of Motilal Oswal now joins us to talk about that and much more. Navneet, hi. What's your sense on the crude prices? Very, very volatile each day of this week. Now, what are the price ranges?
Well, crude oil prices largely have been very volatile for the week, as you mentioned, and data points also have been suggesting a lot of volatility and a lot of mixed data points. We continue to remain of a positive bias, and we expect that a break above 63 for the Brent could take prices immediately towards 65, 65.5 levels. So we're just waiting for a breakout. Until then, any dips could be used as buying opportunity. For intraday perspective also, we would like to buy on the MCX around 4050, which stops below 4000, targeting 4140 on the upside.
How are you looking at the metal prices? Because we have seen a sell-off coming across here, not just about US and China, but this also has to do with the increase in production that we've seen from China. Also, the latest data suggests that the global inventories for many of these metals also seem to be turning around. So that deficit seems to be narrowing. We are looking at surplus for many of these metals. How are you looking at this whole sector?
Well, things have started to look actually suddenly taking a U-turn for the metal space over the last 1 week or so. All the metals which were looking very lucrative have suddenly started to show surplus for the next year. Inventories have started to show some rise, and the backwardation in most of the metals have started to fade off. Having said that, the trade deal hasn't been of any much help or support for the base metal prices, and until we see an actual sign off for the deal, we don't expect that any kind of pullback or any rally is due for the base metal complex particularly. Copper is giving a weaker signal at the moment, and it looks like could head a little lower. One can sell around 434, which stops above 436, targeting 430 and lower levels in the coming days. Similarly, zinc has also seen a jump in inventories along with some narrowing of backwardation. Zinc looking weak at the moment, and one can sell around 187, which stops over 189, targeting 183, 184 on the downside.
Navneet, what's your sense also on the silver prices? Because gold, I understand, is capped because of various reasons, but do you see much more decline in silver because the way the base metal prices are headed?
Silver actually hasn't performed really well over the last 1 month or so. After hitting 50,000 levels, has been under pressure, marginally trading below 45,000. We expect that the negative news in base metal is kind of already factored in, and silver should be taking some support around 44,500, 600 levels. So we do not see a major decline in silver price in the coming days, and we suggest that dips could be used as buying opportunity, targeting 45,400 and 46,000 in the coming couple of weeks.
All right, so silver actually could be looking at some support, but it really is the industrial commodities which have been under very much of pressure. Navneet, thank you so much for joining us, and thank you for those strategies as well. But keeping it on with the industrial commodities, the other one really has been rubber, where we've seen some spike up in prices. If you look at the Indian prices, they are trading at a 2-month highs, and the toke-home prices were trading at a 4-month highs early in the day today. But there are concerns when it comes to the demand, because the Indian tire production has continued to slip, taking cues from the vehicle production, which also has continued to slide. Let's get more information going in, and joining us for that is Rajiv Budraja. He's DG at Atma, and he joins us on a phone line now. Rajiv, hi, thank you for your time. What is the sense that you're making right now, especially with the availability of rubber? We do understand that the supplies are going to be lesser. There have been reports coming in from Malaysia, Thailand, Indonesia, that the supplies from there could fall by 8 lakh tons. There are concerns in the production there, but what is the scenario right now when it comes to rubber for the Indian markets?
Well, the position is already tight. The tire companies are experiencing tightness, which is very unusual at this commencement of the peak season. It is rather unusual also because of the fact that the domestic demand is already at a low ebb. And if this demand is experiencing the tightness, then one can imagine if industry was at full throttle like last year, it would have been extremely difficult to cope up with the tightness. So it is a matter of concern that at the beginning or at the middle of the peak production season, we are passing through this phase.
Also, Rajiv, how would you look at the Indian domestic tire sector right now? I mean, we do understand that the numbers from all sectors are weak, and so has been the case for the automobiles as well. How is the industry or the sector looking at the current scenario? The last couple of quarters have not been so great, but what is the sense road ahead?
I think in this particular quarter, we are seeing things bottoming out in the sense that I don't think one would be slipping any further, especially on the replacement side. So I think going forward, last quarter and first quarter of next fiscal, things should look up and look better. But as of now, I think it's the euphoria of the festival demand that has kind of helped the industry to kind of tide over the last couple of weeks.
Rajiv, also, how are you looking at the rubber prices per se? Because while, of course, we've spoken about the supply and demand at a 2-month highs in sense of Indian rubber prices, the global prices at a 4-month highs as well. How has the demand been? How have the imports been as well?
Well, imports have been much lower this year because obviously imports are there only to bridge the gap between domestic availability, which is just about 50% of our demand. And since the tire industry, the offtake is first the domestic supply, which has been completely taken. So the gap gets bridged by imports. So imports obviously at the back of a lower demand are much lower this year. Overall availability, yes, also is tight. And one only hopes that, things would improve as we cross over the peak production season, because that's the time demand is expected to perk up. And if we end up with a situation where the critical raw material then becomes a supply issue, then I think it's not heralding, good times.
So there is problem at both sides is what you are saying, Rajiv. But I just want to read out your data that ATMA has put out, saying that the total tire production between April to September has been much lower year-on-year basis. The number is 912.6 lakh tons. What is your expectation from the current quarter then? Are we looking at an improvement on this number?
Marginal improvement, one can say, that too because of the replacement demand, supporting it. So marginal improvement. I think nothing to write home about, but the negative numbers may drop by a little bit, but we are still not into a positive kind of a territory or the beginning of it. I think that would take probably another quarter or so before we reach into the flat zone.
Okay, so maybe the bottom is behind or the worst is behind, but not clearly out of the woods is the view coming in from Rajiv Budhraja of ATMA. Rajiv, thank you so much for joining us. Well, that really is the view coming in on the rubber and the tire industry, slightly on the weaker side even now, and may take a couple of more quarters before we actually start seeing some light there. With that, it's a wrap up on this edition of Closing Bell, but stay tuned for After the Bell.